Good day, ladies and gentlemen. I'd like to extend a warm welcome to you all and thank you for joining us on this webinar this afternoon. My name is Nonkululeko Nyembezi, Chairman of the JSE. I'm joined on the podium by our Group Chief Executive Officer, Dr. Leila Fourie. By now, this is the 16th annual general meeting of shareholders of the JSE Limited, and actually the second one in a row that we are conducting virtually. As you would all understand, we would all have loved and preferred the old, familiar in-person setting. However, we believe the more important consideration is to afford our shareholders an opportunity to engage with the company, its management and its board in whatever format is necessary in order to achieve that. And as we've all experienced over the past year, this platform has proven quite successful in facilitating an effective engagement, and we all now know where all the buttons are to press in order to participate fully. We have a number of guests joining us today from universities, investment societies, and the media as well. I welcome all of you. At our AGM last year, I reflected on the formidable challenges for our communities, our economy, our country, the world as a whole as a result of the COVID-19 pandemic. We still have a long road ahead of us in meeting these challenges. As we've seen, the second and third waves of the pandemic have had devastating impacts on economies and communities around the world. On a more positive note, the development of effective vaccines offers hope. After completing the vaccination of healthcare workers in South Africa, we began the phase rollout of what we are calling the mass vaccination phase 2 weeks ago, starting with a section of our population that is over the age of 60. We absolutely acknowledge that COVID-19 will for some time cast a long shadow over the economy. That said, we've seen some tailwinds in the strong global growth that was evident during Q1 this year, coupled with elevated commodity prices, which of course is always a boon for the South African economy. Moreover, inflation has remained well below the midpoint of the Reserve Bank's target band during the period, and by all accounts will remain contained for a considerable period of time. The gradual return of some activity to the country as we exited the hard lockdowns imposed last year have started to boost elements of the services sector, such as transport and business services. Taken together with the buoyancy we've seen in the agricultural sector, all these factors have served as the basis for the currently positive momentum for the domestic economy. Last year, government, organized business and labor collaborated on an economic and reconstruction plan for South Africa. In there, a number of actions were identified in order to reignite economic growth. Addressing the known structural impediments is key in this, starting with energy security. As you're no doubt aware, the restructure of Eskom is going ahead. I know these things happen much more slowly than we think they will, but it is going ahead. And while simultaneously, a new bidding window was launched for independent power producers that foresees just short of 12,000 megawatts to be added to the grid from renewable sources. Quite clearly, the unemployment numbers that were released earlier this week do underscore just how critical all these actions are in order for us to get back on a path to economic growth. I would now like to turn to the administrative formalities for this AGM. Starting with the agenda. Our agenda for this virtual meeting is now on your screen. It should be visible to everyone. Once we've dealt with administrative matters, I beg your pardon, I will present our financial statements and reports as required in terms of the Companies Act. We will then open the floor for questions from shareholders on the AGM resolutions specifically. Voting on these AGM resolutions will follow, and our scrutineers will present the outcome of the votes. To conclude the meeting, Leila will present a brief update on the business and take questions from shareholders and visitors alike. Thus, the agenda is as follows. It's on your screen. As I've just said, administrative matters, JSE annual financial statements, and then the voting, Q&A and voting on the resolutions of the AGM, and then we'll have an open session on the business update and Q&A. Before going ahead with the business of the meeting, let me just briefly touch on the meeting etiquette. I'm sure we're all very familiar by now with navigating Zoom meetings, but perhaps a few words on meeting etiquette would still be helpful. The AGM is being conducted virtually, as I said, via electronic participation only, as provided for by the Companies Act 2008, the listings requirements, and the JSE's Memorandum of Incorporation. Throughout the meeting, relevant information will be presented on your screen. There are 3 ways to ask questions during this meeting. Firstly, you may submit a question via the chat box using the Q&A icon at the bottom of the screen. In that event, please type your name, the name of your organization, your question, and then press enter or click send. And the question will be published for everyone in the meeting to be able to read. It will be answered by me or our team. You may, on the other hand, wish to address the meeting directly. In that case, please click the raise your hand icon. Again, the same routine, identify yourself, your name of your organization. Your microphone will at that point have been unmuted by the meeting convener so that you may be able to pose your question. Finally, you have the option of sending an email to the investor relations team at JSE Group AGM@jse.coza, which will again be answered, will be read in the first instance and then answered by our team. In order for an efficient and effective meeting, I would ask that the questions be raised during the 2 Q&A sessions in the following manner. The first session is for shareholders to ask any questions relating specifically to the AGM resolutions before these are put to the vote. The second open Q&A session is for any questions from any of the meeting participants relating to the business and operations of the JSE. We will endeavor to answer all questions today at this session, but those that we cannot will be posted to you at a subsequent time. Please note that only shareholders reflected in the share register and in possession of the necessary letter of representation, or a person holding a valid proxy, which has been filed as required, are entitled to speak and vote at this meeting. Visitors and guests are welcome to pose questions in the general Q&A session later in the meeting. Moving on to the notice of AGM and agenda, the notice convening this meeting of shareholders, including the agenda, was posted to shareholders on the 31st of March 2021 in compliance with the prescribed period for a notice of meeting. I propose that the notice of AGM and the agenda be taken as read. Shareholders represented here today may wish to propose additional items for inclusion on the agenda. If so, please raise your hand now if you would like to propose any additional items.
Chair, there are no raised hands at this time.
Thank you very much. In terms of the quorum requirements for this meeting are that at least 3 members entitled to vote are present in person or represented either by proxy or letter of representation. And in terms of the Companies Act, 208, that at least 25% of shares in issue are represented. I confirm that a quorum of shareholders is present or represented at this meeting, and I accordingly declare this meeting properly constituted. Members of the JSE board are in attendance today, including the chairman of our various board committees. I will ask them to assist in answering any shareholder questions as they arise. And if I may just run through the members of committees that are here today, we have Dr. Suresh Khanna, who is our lead independent director, independent non-executive director, and also chairman of the group audit committee, as well as the group sustainability committee. Lolita Fagude is the chairman of our group remuneration committee. Dr. Mansika Matwane is chairman of our group risk management committee. Ms. Zarina Bassa, chairman of the group SRO committee, as well as Ben Kruger, who chairs our group deal committee. And now I'd like to talk briefly about board succession and continuity. A key responsibility of any board is to secure and ensure continuity of skills and experience on the board itself. This is a responsibility that the JSE board takes seriously, and it forms part of our ongoing governance program rather than just a once-off exercise. Each year since 2015, we've made appointments to the board with a view to achieving an appropriate and optimal balance of knowledge, skills, experience, diversity, and independence. We are satisfied that our work in this area has resulted in a board of directors that is well-balanced, diverse, independent both in its composition and in its thinking, and which contributes meaningfully to the oversight of the organizations and its strategies and risks. We are also pleased that our efforts to promote diversity have produced tangible results, with 72% of our board members being women and 64% being Black as at the date of this AGM. We also apply a clear policy on director tenure. Non-executive directors may serve for 3 terms of 3 years, in other words, a total of 9 years service, followed by no more than 3 further 1-year terms if approved by shareholders. A director may therefore serve for a maximum of 12 years on the JSE board. I have served on this board for 11 years and therefore standing for 1 further and final year as an independent non-executive director and chairman. My involvement with the JSE board stretches back to the acquisition by the JSE of the bond exchange that many years ago. So much has changed in both the global and local capital markets during this time, and I have to confess that it's been a thoroughly enjoyable and rewarding experience for me personally. Naturally, the board has then been engaged with the vexing question of identifying a suitable successor for me as chairman, and we've been embarked on this process for some time, and as you could well imagine, we follow a rigorous and robust process in order to achieve an optimal answer to the question. You would all have seen our announcement last month of the appointment of Phuthuma Nhleko as independent non-executive director to join the board effective 1 July 2021. Phuthuma will also serve as chairman-elect and will assume the chairmanship at the AGM in June 2022. I'm sure you will all join me in extending a warm welcome to Phuthuma. I know he has joined us online as a guest today. The board is looking forward to his contribution and leadership in this business as it charts the next phase of its growth strategy. Moving along to our next item of business, and this is the presentation of financial statements and our social and ethics report. The required documentation for this meeting has been in your hands for some time now. This includes the audited consolidated annual financial statements for the year ended 31st December 2020, including the director's report, our group audit committee's report, and the independent auditor's report. Next, our integrated annual report for the 2020 financial year. And finally, our remuneration report and the social and ethics report also for the past financial year. These reports are comprehensive and address the various activities of the group during the 2020 year. I have nothing further to add to these reports at this time and merely present them to the meeting. As these reports are non-voting items, we will take them as read. At this time, we will now open the floor for the first Q&A session. To remind you, at this Q&A session, shareholders may wish to raise questions on our integrated annual report as presented or any of the proposed AGM resolutions. And as I've asked before, if you would kindly identify yourself as a shareholder as well as your organization when you do pose the question. The floor is open. Hello, Chris. And I see Tracy also has raised her hand, but I think that Chris was first off that. So let's start with Chris, please, if we may.
Chair, Chris seems to have lowered the hand, so we'll enable Tracy. Tracy, if you could go ahead.
Good afternoon, Chair. Can you hear me?
Yes, indeed. Hi, Tracy.
Hi, my name is Tracy Davies and I am Executive Director of Just Share. Just Share is a shareholder in the JSE, as am I in my personal capacity. My question relates to your integrated annual reporting. But if I may just start by saying that Just Share has attended over 20 virtual AGMs in the past year. And despite asking on many occasions for this to happen, today is the first time we've seen an agenda for an AGM, and it is a really wonderful thing to see and makes the whole process so much easier to manage. So thank you very much for that. I move to my question now, and that is that the JSE is a founding member of the Sustainable Stock Exchanges Initiative, which has as one of its main goals for all stock exchanges to provide listed companies with guidance on sustainability reporting. Separately, in July 2020, the Global Investors for Sustainable Development Alliance, of which Ms. Fourie co-chairs, recommended mandatory sustainability reporting requirements and disclosures, including the recommendations of the Task Force on Climate-Related Financial Disclosures, or the TCFD. This was part of the Alliance's report on urgent actions to harmonize and scale sustainable finance. However, of the 107 stock exchanges tracked by the SSE, the JSE is currently one of the 59 that does not provide written ESG guidance. It also does not require TCFD disclosure as part of its very limited mandatory sustainability reporting requirements. Initiatives like the SSE and the Global Investors for Sustainable Development Alliance are extremely useful mechanisms for driving action on the Sustainable Development Goals and in particular urgent climate action. The JSE makes much of its membership of these initiatives, and so it's concerning that it appears not to have implemented some of their most basic recommendations. When will the JSE publish ESG reporting guidance for issuers in accordance with its SSE membership? And when will it implement mandatory TCFD disclosures? And just finally, for the avoidance of doubt, the provisions of the King Code, which have been incorporated into the listings requirements, relate mainly to corporate governance practices and do not constitute guidance on sustainability reporting. Thank you very much.
Thank you very much, Tracy. We will take a few questions at a time, perhaps 3 or 4. So if we could go to the next person in line, please, Asaf.
Then Mr. Logan has indeed raised his hand again. Mr. Logan, you please proceed. Mr. Logan, if you could unmute yourself. Thank you.
Thanks very much. Thanks. I do have some compliments which I'd like to give you. I don't know if you want me to defer it to General, or I could give it to you now before my formal questions.
Chris, it's totally up to you.
Okay, well, yeah, I'd just like to, and I'll be brief, I'd just like to say, you know, very well done on your resilience and agility in the face of the pandemic. I'm sure it was incredibly tough keeping the markets going, and you did a great job, so well done. Then also, it's noted that you've been what's called a catalyst for change in modernizing exchange control. I'd really like to commend you and encourage you to do a lot more of that. We need a lot more, and you're ideally positioned given your credibility and standing in the markets. Then the last one, I have seen that you've taken steps to promote share ownership and alignment amongst your directors, which is great. You're the only JSE company I know who has a policy encouraging your non-execs to become shareholders. Well done on that. I think alignment's key, and a lot of companies need to follow. So then just moving on to the questions, and the first one's a weighty question. It's of great concern the net delistings trend continues despite a red-hot global IPO market. And while you note a net negative effect of delistings have been a function of the JSE since 2016, and you seem to be understating the gravity of the situation. And I say that because well-functioning exchanges enable economic growth and development by facilitating the mobilization of financial resources, by bringing together those who need capital to innovate and grow, and those who have resources to invest. As I'm sure you know, that's from the World Federation of Exchanges in a paper called The Role of Stock Exchanges in Fostering Economic Growth and Sustainable Development. And this delisting trend has continued, even though we're in the grip of what's truly a remarkable global IPO market, which is totally bypassing the JSE. And just some examples of that. In America, we've already had 496 IPOs in 2021 alone. India, 47. Brazil, 15 in the first quarter. Israel, 42, notwithstanding they're fighting a war, or have been. And then Australia, 2,500 companies which have IPO'd since 1998. So clearly, companies raising money promotes growth, innovation, and employment. And it's not happening here. And of course, it leads to greater fee income, and our fee income has been under pressure. So my questions are, are you not alarmed about the shrinking listing universe against this boom backdrop? And whether you can share the reasons behind this trend and if there's a turnaround plan.
Okay, thank you very much, Chris. I suppose we go to Robin or to Melody. I'm not sure who was first. It doesn't really matter. Robin, do you want to go?
Thank you, Chair. Can you hear me?
Yes, we can, although if you would speak a little bit louder, it would be helpful.
Certainly. Good afternoon, Chair. My name is Robin Hugo, and I'm also from shareholder Just Share. Your social value report recognizes the need for business to embrace the Sustainable Development Goals, or SDGs, and ensure that activities positively affect their achievement. Climate action is one of the 6 SDGs that the JSE has identified for prioritization. In an assessment of its performance as a company in relation to the prioritized SDGs, the JSE states that it continued to evaluate options to enhance our efforts towards making the JSE a paperless environment. In relation to its performance on climate action as a regulator, the report indicates that the JSE is committed to continuously improving our responsible investment indices. In relation to its performance as an exchange, the box is blank. As you will be aware, global climate action is accelerating, and the climate action SDG is to take urgent action to combat climate change and its impacts. Beyond enhancing efforts to make the JSE paperless and improving responsible investment indices, please could you expand on the JSE's plans to make a meaningful contribution to the climate action SDG? Thank you.
Right, I think we're going to stop at that 3 and attempt to give you answers to all of those, starting with Tracy's question, and thank you for noting the point about the agenda, Tracy. The issue about climate change, as you at Just Share would probably understand better than most, is a global problem. And as such, it requires a global response. We believe that coordination amongst various actors, influencers, and importantly, even policymakers in this area would yield an answer at the other end that could be adopted as a global standard. And we do believe that disparate actions by different actors going off to do their own thing would not necessarily have the level of impact that a coordinated response would have. This stands behind our various participations, as you outlined, in some of these international bodies that you have noted. It's also important to locate any kind of climate response that JSE may embark on as a regulator towards its issuers within a South African context. You are clearly aware that National Treasury is also doing work on this issue. And again, the JSE participates in National Treasury structures in their working groups in order to fashion a country-level response. We believe that it would not be the right thing to do for us to go off ahead of all of these activities, having reached a consensus position, and mandate something that may turn out to not actually be the right thing and have to turn around and change all of that again. What has been exceptionally encouraging in this coordination phase of climate response is the work that's now being done by the IFRS Foundation, which, as you would be well aware, is now picking up the mantle in order to devise what could be a globally acceptable IFRS sustainability standard. We are very, very involved in all of these activities, and the JSE will take a view as one gets adopted as to what we do next. But I think it is very important for shareholders and other people interested in this topic to understand that we are simply too small to lead on this and go off, as I said, in that fashion. We do want to see the impact across the country, across the globe. We are very committed to this, except we're going to do it in tandem with many others who have a valid contribution to make in this. Don't know if you want to add anything to that, Leah. If not, you can go to delistings.
Yeah, no, happy to do that. Chair, I'm wondering whether that point that you raised actually leads very well into Robin's point, and whether before we go into delistings, we can deal with that because it's aligned to to Tracy's point. I think just to, and it really goes to what is the JSE doing about sustainable development generally. While we aren't necessarily mandating at the JSE initially, we are taking a very strong, meaningful and leading role on the global stage in shaping climate change and TCFD or other disclosures relating to climate change. We chair one of the committees locally on the National Treasury Forum, the National Treasury Sector Climate Forum. And on the global stage, as you will be aware, I chair the GISD and also the stock exchanges, the SSE Sustainable Stock Exchanges Initiative, with the London Stock Exchange Group CEO. At the end of the month, we will be launching a guidance paper around TCFD disclosure, and that will be for all exchanges. We've had a meaningful input into that, and we are guiding strongly. On the GISD space, in the GISD space, in my role as co-chair, we interact extensively with multilateral organizations. Particularly noteworthy is the IFRS Foundation, of which Suresh Khanna, one of our lead independent, sits on. And we are working closely with them to forge and drive a global unified standard for reporting. This is in lockstep with IOSCO, and we fully expect to see results imminently. Were this to be a long-term sort of 5 to 10-year roadmap, we would certainly contemplate our actions in the interim. Because it's imminent, as the chairman said, it would not be expedient. Insofar as what the JSE is doing on sustainable development, I'd say that there are 3 elements: product enablement, governance, and advocacy on the national agenda. I have just covered off in relation to both Tracy's question and of course Robin's, the advocacy component. On the product side, we have launched, as you would be well aware, green bonds, and most recently sustainable and social bonds. We are imminently about to announce for consultation a transition bond framework, and we are also interacting extensively on indices to ensure that our social responsibility indices remain up to date. Insofar as governance goes, as you would be aware, the JSE works collaboratively and closely with a number of regulators, and we have more recently worked closely with the King Committee. And yes, we do hear your point that the recent governance guidance note is not explicitly on climate disclosure, but rather governance focused, and we will look to global bodies. So the JSE takes sustainability very seriously, and within our own organization, we have been reporting on our carbon footprint for more than 6 years. And notwithstanding the fact that the company is rather small and not actively involved in any fossil fuel related activities, we do make a meaningful focus on managing our own small footprint. If I now move, Chair, if I may, to Chris Logan's question. Thank you so much for your commentary and your very kind words, Chris. We really do appreciate it. On exchange control, that is something that we feel very strongly about, and we think the liberalization of exchange control will go a long way to improve and increase confidence. It'll move us towards an OECD status, and we believe ultimately by adopting an abundance mindset would increase potential inflows, particularly relating to accepting dollar collateral and the possibility of listing dollar IPOs on our exchange. Insofar as the delistings go, we really do acknowledge the problem, and we are very, very alive to the actual nominal number of listings. That said, although the number appears high, it needs to be viewed in context. And most of the delistings that we've seen have, unfortunately, for those companies, been in the tail end of the market. So we're talking about small, mid-cap, and fledgling. In fact, more than half of the listings, the delistings that we've seen, have also been in schemes of arrangement. So that said, the market cap of the overall exchange is potentially a more appropriate indicator of investor value than rather the actual nominal numbers. And if we have a look at the numbers, they speak volumes. For example, in 2020, our market cap increased by 20% from 15 to 18 trillion rands. And in that period, we had 20 delistings, which were amounted to a mere 70 billion rand, which is less than 1% of the market cap. This year, our market cap has increased by 7.6%, and we've had 14 delistings year to date to the value of 72 billion, which is less than 0.5%, 0.38% of market cap. So we are alive of the challenge in the actual numbers. But when we look at the volume, we see that this is very much a function of the cyclicality. Typically, during a downturn, debt is cheaper than equity. And unfortunately, the smaller cap market, which are illiquid, tend to suffer the most. What are we doing about this? We have a number of initiatives at play. Firstly, you would be aware that we have announced the Cutting Red Tape initiative. We are actively engaging the market. We had more than 40 responses. We're delighted with the feedback, and we will be reviewing those. Our regulatory department will come back. We've also been alive to the changes in capital formation in the private capital markets and private equity, for example. And we are launching a private placement market focused on key growth nodes, which is the infrastructure and the SME space. We're also working with our peer exchanges to try and encourage a fast track and a dual listings framework. And indeed, we have some imminent progress in that space. In addition to that, we are working with market participants to target single names and to try and bring those to market. So this is an incredibly complex problem. It's not easily solved. It's not the first time we've experienced a problem of this nature. And there is a global contraction in public markets. And we are notwithstanding the very high nominal numbers that you did raise, we shouldn't underestimate the problem globally. So the global listings environment grew by less than 1% over the past year. And although the Americas were up by 4.5%, the APAC and EMEA regions declined respectively by 0.03 and 0.13 respectively. So I'll stop there, but very happy to engage offline in more detail.
Let me just add to that last part that Leila touched on. One can't really divorce IPO activity on a market, a capital market, from the general macroeconomic circumstances of a country. South Africa has been going through this low growth economic cycle since 2019. So it would be unusual to see in a cycle like that, a huge activity happening on the markets. This is in contrast with some of the markets that Chris quoted in the stats that he gave earlier, that had been, up until the COVID pandemic, been in fairly good nick and growing quite strongly. So that is the one factor I think that one needs to take into account. You also really need to take the numbers in relation or in comparison to the size of the market. So the number for New York, for example, has got to be contrasted with the overall size of that market, and rather than just the sort of absolute number on their own. With everything that's been said, it is a concerning thing. We're working on it. We do want to be a fundraising mechanism to grow South Africa Inc. in terms of economic growth, hence the private markets SME efforts that Leila has just spoken about. If we could take the next 3 sets of questions, starting with Melody. I see Tracy's hand is still up. I don't know if it's an old hand or a new hand, but Asaf, if you could just run us through, please.
Melody, if you could kindly unmute yourself and go ahead.
Thank you, Chair. Can you hear me?
Now we can.
So my name is Melody Chironga. I'm from Just Share, and this is my question. In its 2017 report, How Stock Exchanges Can Advance Gender Equality, the Sustainable Stock Exchanges Initiative recommends that stock exchanges require or encourage listed companies to publicly disclose targets for female representation in leadership and to report on their progress. This is required by the JSE listing requirements. In 2020, the 30% Club released a report with some concerning findings. Of the 291 JSE listed companies analyzed, almost 20% did not provide any information on gender at board level, and 64% failed to set any targets for gender representation on their boards. The report also noted that there are still very few companies that reference a web address directing the reader to the actual gender policy. These findings are in keeping with JustShare's own research and analysis, which reveals that a number of issuers do not have publicly available gender and race diversity policies, and even fewer have set targets. Some which have purported to set targets had already achieved those targets when their policies were adopted. It is quite clear that a significant proportion of listed companies are treating the listing requirements on this issue as suggestions. Last year at your AGM, you told JustShare that it is not up to the JSE to enforce compliance with listing requirements relating to race and gender diversity at board level. Please, could you advise what steps you therefore recommend shareholders should take to ensure that listed companies are complying with these requirements? Thank you, Chair.
Thank you, Melody. May we move on to Alex? Alex, unmute.
Alex, if you could please unmute and go ahead.
If Alex doesn't wish to speak, we can move on. Tracy, was this a new hand?
I believe it was, Chair.
Thank you, Chair. I will be brief, but I think it's really important that I just respond to your responses to our questions around climate action. It's very concerning the approach to wait for global standards. With all due respect, the TCFD is a global standard. And this is very much the same answer that you gave us to a similar question last year. The IFRS standards we heard in an Ernst & Young webinar yesterday will be at least 3 years in the making, and those are just the climate standards. The London Stock Exchange already requires premium listed companies to report in terms of the TCFD. There really is no good reason why the JSE can't take some action if all the stuff you say in your reports about understanding that the climate crisis is an urgent crisis is really true. Thank you.
Asaf, you want to take one more question? I think Christopher is back with a new hand.
Hello, yes. Thanks. Just, my question is not so much on a delisting aspect, although, as I say, these have been in place for 5 years on the JSE. The JSE is not fulfilling its function of financing new ventures. And, this is happening globally. I mean, I look at the ASX, they make a point of saying how many new tech shares they've financed and how good this is for the economy. It's happening in every market I've seen, but nowhere is it happening on the JSE. And there's no comment. So I actually think you're understating the problem. And it leads into my second formal question. The JSE's actual performance, its share price performance, and its ratings have negatively disconnected from other exchanges. I'll be specific. The JSE share price performance has diverged negatively from its 14 peers, as set out in a worksheet I supplied you with. The JSE Limited is the only exchange to post a negative return over the 5 years to 31st of December 2020. And the JSE is the worst rated by a wide margin in terms of PE and dividend yield, implying poor growth prospects. If you look at your ratings, you're on a prospective dividend yield of 7%. That's saying you ex-growth. Your rating is actually similar to a tobacco stock. So can the chairman please advise whether the JSE is concerned by this divergence, has an explanation for it, and whether the poor rating of the JSE Limited paper will constrain its non-organic growth aspirations, that the JSE does not have highly rated paper to use as a currency for acquisition. Then I've got another question. I don't know if you want me to give it to you now.
Yes, please.
Okay. It follows on. That World Federation of Exchange paper and the UNTAC paper note, apart from promoting growth through listings, exchanges also seek to promote good corporate governance amongst listed issuers, encouraging transparency, accountability, and respect for the rights of shareholders and key stakeholders. This appears critical given the JSE's history of corporate scandals and charges of red tape. And it obviously feeds into the lack of new listings. Any number of corporate leaders I speak to moan about the JSE, and I'm seeing a lot of activity where people are looking at raising money but not going to the JSE. So can the chairman please advise how the JSE is seeking to promote good corporate governance so as to facilitate a healthy and vibrant exchange, one which grows the number of listings and grows the country? Thank you.
Thank you, Chris. I think we're going to then move to answer that batch of three questions, starting with the question posed by Melody. I think there is a slight disconnect between what I think I heard and I'll ask you to just clarify. When we have a listing requirement, we are responsible for ensuring that the listing requirement is complied with. I'm not sure whether you said we need to advise you as we do not enforce the listing requirement. Is that what you said? Is that what you said? Do you want to just clarify that remark, Melody? No.
Yeah, hello.
Yes. We certainly, in putting out a requirement for disclosure, we expect that listed companies will then hold up that side of the bargain. The comment we would have made is that we do not participate in the actual setting of that target. Neither does the JSE participate in, well, if the issuer has not met the target, what happens? We are not there for that. We are there to just merely make certain that issuers do publish their targets and then publish how they're doing against that. So if the question is, well, the issuers didn't do that, JSE, what did you do? That is the question that we need to respond to, and Leila seems ready to do just that.
Thank you, Chair, and thanks very much, Melody, for that question. This is a really important aspect that is close to the JSE's heart. That said, the targets are voluntary, and of the listed entities that are reporting, 50 are secondary listed, which means that they are required not to follow the JSE's listings requirements, but their primary listing destination. And also 20 of our companies that are listed right now are suspended. So these sorts of things things can tend to distort the facts. That said, we do take the point, and we do agree. And I have to say the JSE was noted as the most transformed stock exchange in the emerging markets by number of females that are represented on the board. And while that sounds like a wonderful accolade, the reality is that only 28% of boards are represented by females, and that does need to change. So we take that on notice, and we take your point.
If I may then move to Tracy. Tracy, that I acknowledge and respect, it's your opinion, and so what we set out here was the philosophy under which the JSE is currently working, and I hope that you will equally, as much as you don't agree, respect that that is our philosophy. I think if in year 3 and 4 we were still telling you the same thing, you would have a right to then disbelieve us. But what we would ask for now is time to conduct this particular agenda point in the way that we outlined before. Chris, PE and share price. Leila, over to you.
Thank you, Chair. I get the interesting topic to discuss. Chris, yes, thank you so much for your question. And indeed, I think that we appreciate the detail that you gave us on share price comparisons. I think that we have data that looks a little bit different. And so if we look at the emerging market exchanges, performance year to date certainly is shifting. So in the emerging markets, Mexico was down by nearly 5%, India is down by 14%, Brazil's down by 16%. The JSE was up by 4.6%. That said, I do agree with you that our PE is something that we need to contemplate. On an ROE basis, the JSE's forward ratio is much higher, but it's 19.7% as compared to Canada, which is sitting at around 13%, and Europe at 17%. When we speak to our shareholders, they identify 3 areas that they focus on that affects their PE. The first is risk and resilience. They score us highly. The second is financial return, and insofar as our very high dividend yield, 7%, which I do believe is head and shoulders above other exchanges, and we will have to have a look at the source of your data versus ours. The other exchanges are sitting at sort of between 2 and 3%. The JSE is at around 7% divi yield. That said, the shareholders score us well. Where we have work to do and where we are focusing is in the growth and particularly the diversification of our revenue streams. We are cyclical in our revenue streams, and this is really what is driving our strategy. And what we are doing to date is to look at inorganic opportunities, to look at organic opportunities, and to build out alternative markets. I would like also to say that the drag on the financial statements over the past 5 to 7 years relates to the pricing response to our competitors. We are now at par with our competitors, and also the very high amortization of our ITAC multi-year project, which reached its peak last year. So we are set to and focused very heavily on growth, and we will be working with market participants to address our listings problem, part of which is out of our control and subject to the vagaries of the economy. And we will also be looking to expand and diversify our revenue streams. That is a multi-year project and something that won't happen overnight.
I'd like now to turn to the Q&A in the chat box. We will now start getting a little bit more focused on the actual AGM resolution questions so we can continue. So if I could ask, oh, we can read quite well in front of us. So the first one, Romy, you want to just read out loud? No?
Asif can.
Certainly, Chair, I'm happy to read out the question. There's a question from Theo Henning. The question is, in the USA market, there's been a big swing to ETFs. Is the JSE doing anything to promote this in SA, or does this not align with the major shareholders?
I'm going to put that into the general Q&A, so don't take it away. We're now just basically trying to go back to the meeting. I know we sort of allowed it to go all over the show. Can we just go back to the actual substance of the meeting? We will take all of the general questions in Q&A number 2. Is there no question in there that was to do specifically with the annual reports and the financial statements? Can you just flesh that up again? Okay, so there's an ETF question, shrinking listing we've talked about. We can also go back to that, Theo, if you want us to go back again. We've seen the gender question and the 30% club. All right, I think that in that case, I am going to ask the meeting to refocus on the actual resolutions that we are putting in front of you. So thank you for all of those questions. We'll come back again to more of the same at the end of the formal part of the meeting. I am sure that there's a few more that will be brought to the fore other than the ones that are in the chat box right now. I will present the various AGM resolutions as contained in the notice of meeting, and they'll be displayed on the screen one by one for your information. We have essentially 3 types of resolutions, 6 dealing with ordinary business that requires a simple majority, 2 that are often advisory non-binding nature, and 3 that will deal with that are special resolutions and will require a special majority. Please note that in terms of the JSE's Memorandum of Incorporation, resolutions at this meeting will be voted by means of an electronic poll rather than by a show of hands. Voting is open already, so if you're anxious to cast your votes, you may go ahead. Please click on the Vote Now link on your secure link, and it will direct you to the voting platform, where you can then reflect your vote for, against, or an abstention. If you would kindly check your selections carefully, as they cannot be retracted or revoted once submitted. Once you've made your selection for each resolution, scroll down to the bottom of the page and click Submit. A message will pop up on your screen confirming that your votes have been received. The following ordinary resolutions are now being tabled in front of you and require, as I said, a simple majority in order to be adopted. Ordinary resolutions, resolution number 1. In terms of MOI, a newly appointed director must stand for election at the first AGM after their appointment by the board. Ian Kirk joined the board as a non-executive director on the 1st of October 2020. Accordingly, he is standing for election for the first time by shareholders. Ian is well known to many of you. A brief biography was contained in the notice of meeting. I hereby propose Ian Kirk be elected as a director with immediate effect. Moving on to ordinary resolution number 2. Directors serve three-year terms and retire by rotation according to the provisions of our MOI. Directors that are eligible do stand for re-election by shareholders. Our nominations committee has considered these proposed re-elections and has recommended that Nolita, Mantsika, and Artie be re-elected as directors. I therefore propose that the following directors each be reappointed with immediate effect for a further term, noting that each of these 3 re-elections is by a means of a separate vote, starting with Ms. Nolita Fagude, Independent Non-Executive Director. 2.2, Dr. Mansika Matwane, Independent Non-Executive Director. Item 3.1, Ms. Ati Takuden, Executive Director and Chief Financial Officer. Again, a brief biography for each of these directors was contained in the notice of meeting. I will now hand the chair of this meeting to our lead independent director, Dr. Suresh Khanna, who will propose ordinary resolution number 3.
Thank you, Madam Chair. As mentioned earlier in the meeting, our tenure policy allows a non-executive director to serve for a maximum of 12 years. However, after 9 years, each further 1-year term must be approved by the shareholders at the AGM up to the 12-year limit. Nku has served for 11 years on the JSE board, having been first elected at the AGM in May 2010. As an independent non-executive director, she has served with distinction as chairman of the board since 2014. Nku remains independent in character and judgment, and the board is pleased to recommend a reappointment for a final 1-year term. Her biography is set out in the notice of the meeting. I propose that Nonkululeko Nyembezi be re-elected as a director with immediate effect. That concludes the presentation of resolution number 3, and I will now hand the chair back to you, Madam Chair.
Thank you, Suresh. I'm going to move us now to ordinary resolution number 4. Ernst & Young serve as the independent auditors of the group and are due for reappointment by shareholders. I propose as ordinary resolution number 4 that E&Y be reappointed with immediate effect as the independent registered external auditor of the group for the ensuing financial year or until the next AGM, whichever is the later, and that Mr. Imran Akuri be appointed with immediate effect as a designated auditor for the ensuing year or until the next AGM, whichever is later. Ordinary resolution number 5. In terms of the Companies Act and the JSE's MOI, the JSE board is proposing 4 independent non-executive members of the board for re-election as members of the Group Audit Committee. The Group Audit Committee serves as the audit committee for JSE Limited and all of the group's entities. Brief curricula vitae of these directors are reflected in the AGM notice, and each appointment is by way of a separate vote. I propose as ordinary resolution 5.1 the reappointment of Dr. Suresh Khanna as member and chairman of the Group Audit Committee. I propose as ordinary resolution 5.2 the reappointment of Zarina Bassa as a member of the Group Audit Committee. I propose as ordinary resolution 5.3 the reappointment of Siobhan Cleary as a member of the of the Group Audit Committee. Finally, I propose as ordinary resolution 5.4 the reappointment of Faith Kanyile as a member of the Group Audit Committee. The last ordinary resolution, resolution number 6, deals with the authorization of any director or the group company secretary to implement these resolutions. We now move on to the non-binding advised resolutions, which require the support of a simple majority in order to be adopted. These 2 resolutions enable shareholders to express their views on the remuneration policy of the group and on its implementation. While these resolutions are often advisory in nature only, The board will take the outcome of the vote into consideration when considering any amendments to the JSE remuneration policy. Advisory resolution number 1. I propose that shareholders endorse the remuneration policies of the JSE as set out in the remuneration report. Secondly, advisory resolution number 2, I propose that shareholders endorse the remuneration implementation report of the JSE as set out in the remuneration report. I will now deal with the 3 special resolutions being proposed for shareholder approval, which, as I said before, will require the support of at least 75% of the total number of votes present in order to be adopted. Special resolution number 1. The reason for special resolution number 1 is to authorize the company by way of a general authority to acquire the company's issued shares on such terms, conditions, and in such amounts as determined from time to time by the directors of the company. The directors currently have no specific intention to act in terms of the authority to be granted by the passing of this special resolution, but will continually review the company's position in considering whether to effect any purchases. I propose as special resolution number 1, the general authority to acquire the company's issued shares in accordance with the provisions of the Companies Act 2008, the JSE listings requirements, and the JSE MOI. Special resolution number 2 authorizes the company to provide financial assistance only to group entities for the purpose of facilitating normal day-to-day commercial and financial and financing operations among group companies. This resolution specifically excludes any financial assistance to directors and officers. I propose as special resolution number 2, the authority to provide financial assistance to group entities in accordance with the provisions of the Companies Act. Special resolution number 3 authorizes the payment of emoluments to the non-executive directors of the JSE for their services as directors. You will all know that we did not adjust the emoluments in 2020 in solidarity with the unusual circumstances facing companies during the COVID-19 pandemic. Our policy provides that emoluments should be benchmarked against a relevant peer group of companies. Our group REMCO reviewed independent benchmark analysis in determining the proposals set out in this special resolution number 3. This independent benchmarking exercise indicates that emoluments for 2021 ought to be increased by approximately 9.5% on average, which will bring the emoluments payable to the JSE's non-executive directors to approximately 91% of the median of the peer group of companies. The average increase represents an annualized increase of 4.62% per annum since 2019, which is broadly in line with the increase in CPI over this period. I propose as special resolution number 3, the authority to pay emoluments to directors in accordance with the schedules set out in the notice of meeting and the provisions of the Companies Act.
Madam Chair, we do have a raised hand. Would you like to address this now or in the second Q&A session?
We will address it in the Q&A to follow.
Thank you.
I confirm that all AGM resolutions have been put to shareholders and invite you now to submit your votes via the online voting platform if you haven't yet already done so. We'll pause very briefly at this point until our scrutineers confirm that all shareholders currently reflected on the voting platform have submitted their votes.
Shareholders, we will be closing the voting imminently, so last chance to kindly submit your votes, and we will display results shortly.
Thank you.
Thank you, Chair. Results are on the screen.
Thank you very much. All resolutions have been carried by the requisite majority, and we thank you very much for your support. We will now move over to the business and general Q&A portion of our meeting, starting with the Group Chief Executive providing a brief update on the business, and thereafter to take questions as previously indicated.
Thank you very much, Chair, and good afternoon to shareholders, guests, the media. We are delighted to be able to engage with you, even though it's on a virtual platform. Before we get to the open Q&A session, which is such an important element of an AGM, I'd like to offer a couple of general remarks about our markets and our organization, the JSE. Certainly the past 18 months, and it seems longer than that, doesn't it, presented us with very significant challenges. And these have impacted us on a personal and a professional level in ways that would, in some ways, not have seemed plausible at the beginning of 2020. I would like to, however, sincerely thank our staff, our market participants, our shareholders, my chair and the board for their support and their collaboration over the past year. Briefly recapping the year that was, in the context of a very challenging year in 2020, the JSE delivered strong financial performance and business resilience. Our operations held up against record-breaking and unprecedented volatility. Clients were able to trade, clear, and settle through all asset classes across the throughout the crisis. During times of great volatility, uninterrupted operations are crucial for our clients. And we achieved this through consistent, targeted investment into our systems and our infrastructure over a number of years. Our business remains resilient and countercyclical, and we have been a consistent generator of cash and paid consistently attractive dividends. From a markets perspective, it's frequently seen in the year following a major market event that market performance in the new year, i.e. 2021, it's largely being impacted by a very high base for us in 2020. Across asset classes, we do find that year-on-year market performance measures are skewed by the pandemic-fueled hypervolatility, which lasted for most of 2020. We're very pleased that the FTSE JSE All Share Index is up by 16% for the year to date, and we're ahead of the NASDAQ Composite, which is up by 6.74, and the S&P 500, which is up by 12.04, although I must stress at much lower volumes and values. From a strategy perspective, and as we approach the half-year mark, the JSE's inorganic strategy is progressing really well, and the deals that we've done to date are maturing. The integration of Link into the JSE Investor Services is largely complete, and we are now starting to turn our focus to growth in that business. We are very pleased to be able to announce that we have set up JSE Private Placements, or JPP, which is a 100% JSE-owned subsidiary, and that is designed to develop and operate a private placement system in collaboration of UK-based Globacap. We continue to build on opportunities in the market that we've previously not addressed. And this includes small to medium enterprises through a newly developed accelerator program called JSE Ignite, which is in pilot phase, and we hope to launch at the end of the year or beginning of next year. From a core business perspective, our organic business continues to benefit from investments into infrastructure and products that serve the market. From a tech perspective and on the infrastructure side, we completed an important migration of the BDA mainframe, which was from the outside vendor into our JSE data system. And we've made substantial progress on a key priority, which is our cyber strategy, and we're now advancing our cyber maturity. It's important for us to provide safe, secure, and a trusted marketplace, and this is a fundamental feature of our business. In addition, as we've heard from the questions, sustainability is a really important area for both the JSE and the financial markets, and particularly from the perspective of advocacy, sustainability disclosure and standards, as well as from investor products. Our sustainability segment is gaining traction with the first social bond issued in March and the listing of the first self-labeled sustainability-linked bond on the continent. In the regulatory space, we have published a consultation document on cutting regulatory red tape, and we've received abundant responses, more than 40, and we look forward to reporting back on this later in the year. I will acknowledge and reiterate our commitment to driving listings, and the regulatory red tape is just one of many of those. So in concluding, despite the devastating impact of the pandemic, the resilience that has been shown by communities in our country and others does provide hope for the future. And looking ahead, I'm personally very confident that the JSE is well positioned to continue preserving and delivering value to its stakeholders as it continues its journey. And with that, I'll open the floor to questions. Please raise your hands to speak or pop a question in the chat box.
So I think this time around, we'll start with the chat box, as we did not get to those questions before. So if I could ask you to open up those questions. Let's start at the beginning. All right, so the very first question, I thought we had somebody who was going to read questions, but okay, here we go. From Tracy, I'd also like to add just shares. Thanks for allowing general questions rather than just questions from shareholders. This is also unprecedented in the virtual AGMs we have attended. Thank you very much, Tracy. We're going to now Hendrik. I think you've just gone too fast, Matthew. Right, Hendrik Bukaba, I don't think it's fair to blame the JSE for shrinking listing environment. I think other factors like general economic climate, government policy, regulatory environment contribute to how well business perform in our economy. I would completely agree with that, Hendrik. We try to make the point, but I think you make it far more eloquently. Theo Henning, in the USA market, there's been a big swing to ETF. Is the JSE doing anything to promote this in South Africa, or does this not align with the major shareholders? Would you like to answer that?
Yes, certainly. Very, very happy to do that. And over the past sort of 4 or 5 years, the JSE has really made a concerted effort to grow our ETF market. Last year, we celebrated the 20th anniversary of the ETF market, and I'm embarrassed to say that I was around right at the beginning of that journey. We have almost a bit more than 600 million traded in ETFs on a daily basis. And we are very pleased that we have a 20% annual compound growth rate since the first listing, which is a wonderful sign. Last year, our market cap superseded 100 billion in ETFs. And we had the very first listing of a China-focused ETF and our global aggregate bond ETF listed on the main board. Now, we are doing a tremendous amount, and we continue to be focused on our offering to expand this and to evolve to new products. And you would be aware that we are investigating and hope to chat to the market imminently about our new products, and particularly in the sustainability side. We are looking also at active ETFs, which would be an important growth node and an important alternative to unit trusts, which has a very tremendous upside growth opportunity. So very excited about that market, and particularly excited about the growth rate that we saw last year. In 2019, we only had 5 ETFs listing, and last year we had more than 40. So very good and strong growth trends in that space.
Thanks, Leila. The next comment was actually also read out, I think, in Melody's question, so we've addressed that. So we now have David Holland's question, and this is a follow-on to Chris sending charts showing that the JSE's cash flow return on investment has been dropping and is the lowest amongst the JSE's global peers. Although the return on capital is attractive, it has been dropping and accompanied by low growth, which has resulted in share price underperformance relative to the JSE's peers over the past 5 years. If you cite low economic growth, then what steps are you taking to encourage government to implement smarter and growth-friendly policies? We may be at the beginning of another commodity super cycle. What steps is the JSE taking to encourage listings of exploration and junior mining companies? Clearly, the issue of the government business interface is a subject that is a much, much bigger subject than just the JSE. That said, we have outlined some of the areas in which Leila is very, very involved with authorities in various guises and various roles to move some of these agendas forward. But we are also very actively involved in organized business. And organized business actually is the one, I would say, the only way to move the needle in making government listen to some of the concerns and aspirations of business for change. So, for example, I chair the board of Business Leadership South Africa, which is one of the BUSA constituent, the biggest BUSA constituent organized business bodies. And so we have a big level of interaction with the government from that perspective. Leila serves on the board of BLSA. So we definitely do weigh in on SA Inc. Matters from that perspective, and very, very involved as well in the economic and reconstruction plan that government, business and labor published jointly at the back end of 2020. There are many others, but clearly the proof of the pudding is in the eating. So we want to see actual results, but it's just much more to reassure shareholders that we do our part. Some of you would be also aware that we take the message globally. JSE has, for the past 8 to 9 years, I think it is now, convened alongside our co-sponsors an SA Tomorrow conference where we take business leaders in our top 40 alongside political leaders like the Minister of Finance, Governor of the Central Bank, to global investors to drum up the story of South Africa and for investors to come and invest in our markets. These are all slow burn, they happen all the time, and so this is something that the government, the JSE definitely weighs into. Now, one of the top 3 priorities that was contained in the economic reconstruction plan put out by government, business and labor last year was infrastructure development. This is one of the key pillars by which we seek to reignite economic growth in South Africa. And so Leila did feedback on JPP, the JSE private markets or private placements, to give it its proper name. And one of the thrusts of that particular initiative is to create a private market for infrastructure projects. Infrastructure projects are very, very difficult by their very nature to put in public markets. And so we are, in our own way, in our own corner, using the skills and the networks that we have, trying to weigh into this particular debate. So it's a very serious consideration. We devote a great deal of corporate energy in this area. So finally, on your question on exploration, actually, there is not a single junior coal miner or exploration is going to come on the JSE anytime soon, for the simple reason that the Department of Mineral Resources and Energy has not sorted out the licensing of exploration projects. The minister has gone out publicly as recently as this week at the Junior Mining Indaba, not necessarily apologizing for this, but acknowledging it's a nightmare. And until the government has been able to sort out the licensing issue, we're just not going to see any movement in this. We're not seeing any capital coming into South Africa in this area, even as there is interest around the world. So we would not be a lead indicator here, will be a lag. First, the MRE have got to sort out their story before you start seeing any kind of flow into the mining space. It would appear we have one more hand and 4 more Q&As, unless you haven't taken them off. All right, may we invite Karim to take the mic, please.
Hello, my name is Karim Axo. I represent Glacier Pass, an investor in the JSE. Chairman and board, I'd like to thank you for your time today and taking my question. Over the past couple months, I've also had the pleasure of interacting with the JSE's issue regulation and investigation teams. I'd also like to thank them. There was a specific item I was hoping to bring to the board's attention at large. Additionally, I was hoping to follow up on several earlier comments made around delistings. While I note the positive market cap growth the JSE is experiencing, I believe this statistic masks underlying trends. The health of the small and mid-cap sector of an exchange is especially important because this is often where IPOs take place, and this is where the JSE is coming up short. So I'd ask the JSE not to ignore these segments of the market. Moreover, one of the more informing corporate transactions of this year was Cartrack's relisting and offering on the NASDAQ. This highlighted to me that investors are not afraid to invest in South African small caps, but the issue seems to be around investing in JSE listed entities. I believe the delisting trend that was previously highlighted is a significant driver of this. Now, there's no problem with the company delisting. What leads to a loss of investor confidence is when companies delist and shareholders do not receive fair value in this process. And I believe this is partially taking place in the JSE today. I was hoping to bring a global perspective to this problem and present a solution for the board's consideration that I've seen adopted in other markets. Now, South Africa is one of the easiest markets to delist in. Under the Companies Act, a scheme of arrangement requires a 75% vote, but only a 25% quorum. Under the JSE listing requirements, paragraph 1.114, a company is allowed to delist with a 50% vote. This is a challenge for investors, as the South African market is also one of the most volatile markets in the world. And the risk of getting delisted at the lows creates a problem for investors. There's one key investor protection in both the scheme and a general offer to delist, though, and that's an independent expert's fairness opinion. This is also where South Africa comes up short, in my opinion, though. Schedule 5 of the JSE listing requirement states that fairness opinion must include a full explanation of the significant factors that lead to an opinion given. Despite this, the current precedents in South Africa and a fairness opinion is to provide a fair value range with no supporting details, explanation, or calculation. I believe this might simply be because no one's asked the JSE to provide these before. This is out of line with international best practices where fairness opinions often provide the full supporting calculations behind a fair value calculation arrived, including the full list of comparable companies, their valuations, management forecasts used. So the question I was hoping to pose is, I was hoping the board would consider reviewing the JSE's policy towards fairness opinions. I posit that moving disclosure requirements for fairness opinions in South Africa in line with international best practices would significantly aid the business proposition that JSE offers to its customers. Independent experts would be forced to think twice before blessing a below market deal. Moreover, this change would build investor confidence in the delisting process and the capital market in South Africa overall. Lastly, it's within the scope of the JSE's listing requirements today, at least with regard to general offers to delist under paragraph 1.114. I was hoping to get the board's thoughts on this recommendation, and if the board would obviously consider this.
All thought-provoking. Do you want to respond?
I would say that's probably a pretty technical listings requirement. It may require a bit of an offline discussion. I'm not sure if we want to ask Andre, or if we want to.
Yeah, I think so. So our head of issuer reg is on the line, and if he has immediate thoughts, I will invite him to speak now. I mean, I do just have to say that you've given us quite a bit to chew on, and so there may be a need, as Leila says, to touch sides offline. But Andre, do you want to respond?
Thank you, Chair, and thank you for the question. I agree completely. It's probably something that we need to discuss in a bit more detail offline, but perhaps I can just offer a couple of general remarks. I think the delistings framework in South Africa is governed primarily through the Financial Markets Act. And the Act stipulates that you could delist a company that's still eligible for listing by simply passing a resolution. And it's in fact through the listings requirements that we afford significant additional protections to investors. And that includes the fact that an offer must be made, something that is absent in many markets. If you look at the London market, for instance, and Australia, delistings are typically done through a simple resolution without it being accompanied by an offer. So I think our listings requirements do provide additional protections. We do also ask for an independent expert to advise the board on the fairness of that. And we do ask for certain minimum disclosures. And that was obviously put in place after a detailed consultation process with the market. But as with any set of requirements, if there are weaknesses in our rules and we are engaged by the parties that have these concerns, then we would be happy to consider it to see how best we resolve the matter. But I think the important point, Chair, is that I do think our delistings framework is much more stringent than many international markets at the moment. Thank you, Chair.
Thanks, Andre, and thanks for your thoughts, Kieran. I do not see any additional hands or Q&A, and so would invite anyone with a late-breaking thought to submit it now before we move to conclude the meeting. Well, I think it appears we have come to a natural conclusion of this annual general meeting of shareholders. So let me then close by thanking you all for joining us today. We would all fervently wish that when it comes to this time next year, we can again all meet in person and have the kind of AGM that we had all been accustomed to. But in the meantime, we do have COVID-19 to contend with, and hopefully we see that starting to come out of our lives over the next half year and beyond. I wish you all good health ahead, and I hope that you remain safe. I now declare this annual general meeting of shareholders closed.